with. So it's always better to enter with the next cycle, with the next, once you see there's a big move happening, it's always better to wait and wait for the next session to open, wait for the next session to next cycle to open, right? Because now most of the people, most of the retail traders also present in different region of the world, they just started to price in with the news, because they just woke up, they just don't know what happened over when they were sleeping, right? And now they started to pricing in. So that's where exactly the market once again rallied and give you another opportunity to enter up. Hello everyone, welcome back to the call, welcome back to the channel. Today we going to be covering some of the pairs of the Forex, Euro USD, Gold, USD JPY, what's happening, what's the trade updates, and what actually we have covered of the week. So firstly, we are on Euro USD, where we were seeing just there was and sort of a retracement back into these zones from where the actual move originated, where we have this big bounce over the higher side. Then once again we acted as a accumulation phase, and then market distributed some of the orders. We have the move up to the higher side, which resulted in liquidating all of the base which has formed and resulted in this break of a structure. Then we have another break of a structure here on the lower time frame. If we see on the 15s, we have multiple break of structures, because once you started to notice that yes, there is a wave forming up, which is in turn like making this whole thing valid structure to the higher side, making a trend line. But exactly after that, what happened is that we just form a nice little low here, which has resulted in a break of a structure. Then once again we break to the downside, which shows a change of a character, which further hold down right here. Market failed to break this high, and eventually shows that lower time frame wants to turn bearish on the on this particular trend, right? They want to turn bearish. We have a change of a character here, which resulted in a higher low right over here. And then once again, right, if you see, market just went on and it just break the structure once again, shows that yes, on lower time frame there is an actual retracement happening. But on higher time frames, if you see, if we just erase all of this a little mess right over here, if you see on the higher time frames, you should be like seeing some sort of a big, this whole thing should be a part of a big retracement, and that is acting just market just want to get clear some of the liquidity just that is lying below these lows. And now we have this zone once again, which like acting as a very nice bullish OB, where we can actually, market could actually hold zones and react from there if there are some buyers present. And if there is still like some buying momentum right there in this zone, market will eventually attract and the price will eventually fall down within these zones where the actual buyers are sitting. Because like, understand, price always move from one space of liquidity to the another, and if this zone has liquidity, price will eventually fall back into this zone and give you some sort of a confirmation where it just started to form the base, an accumulation phase, and distributing orders shows that yes, sign of reversal. There's a sign of strength in this trend, and now you actually acted upon all of those workings, that yes, there's a sign, there's a base, there is an order block. Now you actually enter the markets and then trade, right? But till now, if you see, there isn't any sort of a confirmation that shows you to take a long position based on this bullish trend. On daily, once again, daily is highly bullish, right? So we were just getting a reaction based on this zone. Now we having a retracement back into the equilibrium zone, where we actually see that yes, market just broke this. We created a low here, we created a high here, we created a low here, and now from here, this was the previous high. And now market's getting back to these swing low zones, where it could actually take some of the support right there in this zone and actually move forward from there, right? And moving on, if we see if there's anything on the lower time frame which is like yes, now once understand the psychology, right? Now once market was going back up from this zone, there was whole of this demand where actually market just stood and it just like reacted well off from there. And what actually happened is market broke a couple of structures on lower time frames. People, retail traders like us, see this as a change of a character, and most of us would be trading these zones for some healthy buys and waiting to clear the market. Market will clear these ranges and all above right there, and we were just waiting to put our long position right there in this zone. But what happened, market knows where exactly the stop loss are. Market knows exactly where the people are thinking that it should be a safer zone to put your SLs. But market is a ever changing thing that just knows each and everything, how retailer psychology is working, right? How they want, yes, to be in a safer position than ever before, right? So they just most of them would be putting their stop losses here, everywhere, right? And most of them would be playing a safer bet to place their stop losses just below this. What happens, we have a big implosive move to the downside, and all of those SL, all of those liquidity just like went down, right? Everything just got liquidated, and then exactly the smart money moved in. They caught on some of the actions, and then they reacted based on this high, and then exactly the move happened once again to the downside. And here exactly once again, if you see what is happening now, because as we know, the lower time frames are now shifted to the downtrending motion. So the psychology was right there is that yes, there are two demand zones on which people were betting. Retail traders like us were betting this zone to go long, and exactly these candles to go long, right? So once market broke this, now all of the buyers, retail buyers who were present there, now all of they were thinking this uh, as a supply now, because now demand has been broken, right? There is no buyer present right now, and all of those are now, even if market reverses, all of those now are converted into sellers. Once market reach back to this zone, all of those buyers who are seeing this as a long opportunity, now they will look this as a selling opportunity, because market has already proved that there is no buyer in this zones. And all of those orders which were left behind now they will get fulfilled, and market will once again turn to the downside once again and have a rally from there, right? So same thing over this demand zone. What happened, this move actually happened, if you see right down there, this move actually happened from the beginning of the London session to the end of the New York. And once the Asian session opened, it just came back to retest the shift of the supply and demand. And the shift, once the Asian traders just woke up and they just see the news, what's happening, and they just started to price in with the markets. And that's where exactly the market once again rallied to the downside and have once again have a good opportunity for the sellers, for the Asian traders to trade the market and trade like another 50-60 pips to the downside, right? And that gives you another opportunity to enter with. So it's always better to enter with the next cycle, with the next, once you see there's a big move happening, it's always better to wait for the next session to open, wait for the next session to next cycle to open, right? Because now most of the people, most of the retail traders also present in different region of the world, they just started to price in with the news, because they just woke up, they just don't know what happened over when they were sleeping, right? And now they started to pricing in. So that's where exactly the market once again rallied and give you another opportunity to enter, a safer opportunity, a very nice opportunity where you can just place your bets with more good risk to reward and have a greater chance to win those trades, right? So this is how you can do, because instead you can just started to go short every time market just breaking down, you're going short here, you're going short here, you're going short here. So market is like doesn't give you any opportunity to form a very nice order block where you can actually pick up the trades. But now as it just closed the candles here, as it just closed the sessions over here, now you have another opportunity where Asian session just opened, and it just gave you another opportunity where you can enter the market. Because on the lower time frame, if you see this as a once again as a this as a supply, market just broke down, cleared this range, having this as a last point of supply. So little bit of a Wyckoff distribution model here, and then last point of supply distributed. So how many pips? If you see on the lower time frame, this could be a very, very big, a very, very healthy move. 35 pips, almost 35 pips. And what would be the risk to reward right there in this particular region would be like if you just looking to target just above this zones, and if you're looking to target just above this zone, this would be your entries, right? And now you see how much money you have made, right? 4.75, right? So you were risking 1% to gain 4.75% of your account on this trade, right? So instead just going taking some blind position based on big moves happening in the market, big news, position decisions coming, and you just trading and betting on them is not an ideal situation. It's always better to wait until market gives you an opportunity, an exact opportunity where you can enter the markets. Okay, so this is how you can perfectly just adjust, just wait for the right moment, wait for the next session to open, wait for the next cycle to open, right? So perfect.